Okay. Hi, guys. Welcome to everybody. It's a pleasure to have you here tonight with me for the second edition of the webinar, option webinar. And can you tell me just if you can hear me loud and clear? Okay. Good. Well, the webinar tonight is a little bit different than the webinar that I presented last time, because I just want to go straight to what's option trading. And for doing this, I need to use the platform that we are using for trading option. And I would like also to show you one of our strategies that we use in this particular condition, market condition. And also, I would like to present the results that we had since the beginning of the year with our swing service. So that's going to be what we're going to see tonight in the webinar. So let's dive into the platform. So I'm going to share my platform. So, okay. Can you see the platform? Okay. So as you can see, this is one of the best platform in the industry for trading option. And not only option, we also trade stocks, equity. We also trade index. We also trade ETF. So we have all sorts of financial instruments that are traded in the United States. One thing that I really like about this platform is that the commission are cheap compared to other platforms, and this is a good thing, of course. And also, we have a lot of features that we can use that are embedded in the platform that otherwise we would have go on the internet and find, as a free resource on the internet. And but the top that this platform has is the Option Station Pro. What is Option Station Pro? Is the tools that we use to decide if we wanna, buy or sell an option based on the strategy that we are applying. So we're gonna go later in the Option Station Pro. I just wanna you to see the platform and introduce you the strategy that we have been using since the beginning of the year and share the results that we had so far. Good. So as you can see, this is the chart of TradeStation. TradeStation is the name of our platform. And I set up what is called a workspace. This might be at the beginning kind of difficult, but I assure you that it's quite easy. And we have a tutorial that will explain exactly what to do and how to use and configure the TradeStation platform. In this workspace, as you can see, we have a window that has a list of all the scans that we have active in the workspace. We have a list of some stocks that we just put it on watch list. Then we had two charts. One is the daily chart. And you can see in this case, we have a Verizon. So VZ is the ticker. And Verizon, we have the chart of Verizon with a particular indicator that we use very often in our trading, which is the Eikinashi, okay? The Eikinashi is a particular configuration of the candle in which we have cycles that go green and then turn red based on particular calculation. And let's say that it eliminates the noise of the chart. So we want to have a lot of, like a green and then red and then green and then red candle, We have a set of cycles of, in the case, of course, in a downtrend, red candles, and then they change in a new cycle. If the trend of the stock is turning bullish, it trend is becoming green, and it started a new cycle. So it's a really good way of, you know, spotting the trend of the equity, that the underlying that we are monitoring. Then below we have our oscillators that we use in this case for this setup. The oscillator that we used are very simple. I mean, there are not magical indicators. We have the stochastic fast, which is it has a custom setting. It has a 14 as a period, and then we have the 17 and 30 and 82. The 17 for the oversold, and then for overbought, sorry, and then the 82 for the oversold. So this is normally the default setting for this indicator is 20 and 80. So we just change it because in our test we saw that these two settings, the particular settings, are working better. Then we have another oscillator, which is the RSI. And the RSI is it has the same setting for oversold and overbought, so 17 and 82, but the length in this case, instead of being 14 like the stochastic fast, is changed to 3. Okay, so in short length. These two oscillator are used with one indicator that we have on the chart. As you can see, as you're familiar, because I'm sure you're going to trade in forex, you're gonna use the Bollinger Band. Okay, the Bollinger Band are useful tools for that indicates the volatility of the chart. Okay, of the underlying in that moment. So basically, when we have the chart which is reaching the upper band of the Bollinger Band, usually, of course, because nothing is certain above all in trading, usually the chart tends to go a little bit, you know, sideways, and then go back to touch the lower band of the Bollinger Band. Okay, so that's the use, you know, we have of the Bollinger Bands. So we also have another indicator, which is the FE new. It's a custom indicator. It's a fractal that we use to, let's say, we're going to see the strength that has at that moment in the trend. Okay. And also for, you know, having a better entry point, we use another chart where we have the simply the chart with the Eikinashi, but in a lower time frame. So here we use the daily time frame, and instead here in the lower chart we use the 120 minutes, is the 2-hour time frame. Okay, so this is our tools for working. Okay, the tools that we use to choose the underlying, in this case, are equities, and based on the choose that we've done from the scan, we are going to apply our option strategy. Okay, is clear till now, guys? Do you have questions? Do you need to clear something? Do you need I don't know, just if you have any question, please ask me any question that you want. Okay, if there is no question, I keep going. Okay, so based on this configuration, okay, what we do is working like we work usually 3 days a week, we just start the scan on Monday night, usually around here in Italy it's now 7 p.m. and I wait till it's about 8:30 p.m. Because the market is closing at 10 in Italy. So I just wait till the last hour of the market. Why I wait the last hour of the market? Well, because in the strategy that I'm going to show you in a while, in a moment, I'm going to evaluate the candle of the day. So I want to see how the market had moved in that day. So a good time to see how the market move is, of course, at the end of the day. And also because at the end of the day, I have more chances to have a good price for my option. You know, when the market is closing, it's always a better way to buy the options, because the price the market maker are more willing to give the price that we are asking. So that's why we operate basically at the last hour and a half of the market open. Okay, so the first thing that we do is going through these two scanner, okay, which are scanner that I built, where I'm going to select all the stocks that have a price between $10 and $150. I don't want to go more than $150 because the cost of the option is going to be expensive. And in this case, I don't want to, invest a lot of money in one position. Then I want to have the volume average, which is, the volume of the stocks, which has to be more than 1 million. And then I'm going to go to the Bollinger Band. And in this case, I want that the last, so the price that is the last price in the market is going to be below, the lower band of the Bollinger Band. So this is a scan which is quite easy to build into the platform, and there is a tutorial very simple that explain how to build this scan. So right now I try just to do an example to see if there are any stocks available at this moment, but I doubt, because it's 7 here, so it's quite, yeah, exactly. So no symbol meet the criteria. Let's go see if we have some candidate for the put option, and we just wait till the scan do its job, and we have no symbol at the moment. Okay, so if there is no symbol, that's good. I mean, no stocks, meet the criteria that we just put on the scan. So our job is done. Of course, that we're gonna try again later when is the right time to use the scan, but we don't have to. We don't have to be forced to find a trade. There are always trades in the market. So if one day there is no trade, no problem. We are not, forced to find a trade that we might adapt to the criteria instead of respecting the criteria. Okay, so I'm going to use these 3 stocks here just to explain you how the strategy works. So I let you understand how we select the underlines of the stock. Let's see at PFE. So what we want, let's say that we are looking to go long with a call option. Okay, so what we want in this case, we want to have a candle which is at the end of the day below the Bollinger Band. Okay, so PFE, of course, in this case, it doesn't match our criteria, but let's go and see some example in the past. So in this case, for example, this was the 23rd, March 23rd. The candle closed just a little bit outside the Bollinger Band. Okay, so this is our first criteria. So if the price is below the Bollinger Band, we go and check the other criteria. The other criteria is that the stochastic fast should be in the oversold condition. Okay, so it has to be below 17. And the blue line, because as you know, the stochastic is composed of two lines. This is the blue one and the red one, and the blue line is crossing towards the top, the red line. And the third condition is that we need to have the RSI in the oversold area. Okay, so in this case, we just touching the oversold area. So this could be an interesting entry point. But the thing is that we don't have, in this case, the two other criteria set, which is the FE, which is the fractal, needs to be, in this area below the 38. So this area here. And we should have, as looking for a setup for a bullish trend, we should have a green candle. Okay, so this might seem difficult at the beginning, but I can assure you that it's quite simple once you practice and you see how it works. It's quite easy. Don't worry about spotting the stocks. So this is basically our work, and we do this for every stock that will appear here in the criteria, and we just go and check that is the price above or below the Bollinger Band. Yes. Is the stochastic above or below the overbought oversold area? Is the RSI below or above? Depends, of course, of if you are bullish or bearish, and so on. So once we have all the criteria that are matching together, then we're gonna have a really good entry point. Okay, so this is actually all the work. I mean, evaluating the stocks, seeing if all the criteria are met. If the criteria are met, then the stock is a good candidate for going long with the call options, or for going short with the put option. Okay, so this is kind of one of the our best basic, because this is a basic strategy for spotting a good entry point. We use this strategy also for the beginning of other strategies that are more intermediate or more advanced, and that we might do a webinar explaining also that kind of strategy. For a moment, let's keep it to the basic, because that's what you guys want to see, and above all, you want to see how to make money with these tools. Okay, so once we spot our candidate, we have to choose the right instrument, right? So the right instrument, if we spot a bullish criteria, we are going to use a call option. So let's say that we want to we want to go along with Verizon in this case. So Verizon, we check that all the matched are checked, and then we go finally on the tool, which is one of the best tools in the industry for option. which is the Option Station Pro. This tool is what we need for see everything that we need for trading option. It has this window, which is the option chain. The option chain basically represent all the strike price of the option that we can choose from, and also has several different expiration. So we can choose the early expiration, we can choose late expiration, we can even go in more than 1 year out in time. Okay, so in our strategy, the rules are quite simple. We use expiration that are about 45 days from today. So in this case, which is the closest number to 45, we have 53 and we have 39. So basically, we can use 39 days. Okay, so we can go out to November, and what we are gonna do next is to choose our option. So we said that we want to go long. So we want the price of the stock increase, because we want to make money if the stock increase. So we're gonna choose a call. Okay, the call is an option that makes money when the stock increase. So I don't want to dive into detail of what is the delta of an option, because it's a particular parameter. It's called a Greek, which is the risk of direction. Okay, but in this case, what I just want you to learn is to read the delta. So I'm saying that I want you to choose a strike of an option which has the delta, so this column here, close to 0.45. So that's the only thing that you have to know. So basically, the two rules for choosing the option is I want to choose a expiration which is between 35 and 45 days, and I want to choose a strike of, in this case, a call, which is a delta close to 0.45. You don't need to know what is delta. Okay, you can trade it without knowing. So in this case, we have a delta which is 0.59, 0.47, and 0.36. So the object choice is 0.47. Okay, so in this case, we are going to choose the strike 60. Here, the strike 60. So we press on Analyze By, and sorry, I had another strategy, so I'm gonna cancel and do it again so you can see more clearly. So we said that we're going to choose the 60 strike at the price, in this case is ask, at the price of 121. So I just click here, and then what I get is my profile of my call option. So this is one contract of the November 6 expiration strike 60 call. Okay, so this is my instrument, is my the instrument that I use to trade the let's say the trend, the bullish trend of Verizon. How much is gonna cost me? How much I'm gonna risk about this? Because this is the other thing that is important. The good things that I love about option is that I have a limited risk, and I already know from the beginning which is my risk. Okay, because in this case, the price here, as you can see, is 1.16. 1.16, it means that I have to multiply for 100, because the leverage that we have from option and equity is 1 to 100. This is explained in the course, so it's quite easy to understand. So every time that you see a price, in this case 1.16, we have to multiply this price for 100. So in this case, this position is going to cost me 1.16 multiply 100, so it's going to be exactly 116. As you can see here, in when I point, the pointer on the graph, you can see that the blue line express the loss that I have, which is 116. 116 is the maximum loss that I can have doing this particular trade. Okay, I can't lose more than this, even if I just forget the trade, just go to vacation, the trading platform doesn't open, you don't have to worry, because that's the maximum risk. Okay, and this is one of the things that I really love about option, having the ability to manage the risk. So if I want to do 2 contract, I just increase to 2, and as you can see, we're going to have a risk of 232. Okay, so 232 now is my new risk. Usually what I suggest is to use like not more than 5% of the account. So let's say that we have an account of $5,000, and I'm not going to use more than 5% for each trade. So in this case, my money management is telling me that I have to risk not more than 250, right? So in this case, with the money management that I just explained, we have 2 contracts at 232, okay? And I like this position. So what am I going to do? I want to put this position in the market. Let's check a little bit the how to read this profile. As you can see, we have this line, this blue line, which is the risk profile of the option, that shows that if the price, which is now 59.70, is going up, we are going to make money. You see in the price that the 2 lines we have above, they just increase, as the price increase, the profit increase, okay, as you can see in the simulation. So what we need in this case is the price goes over the 60, okay, 60, and plus what we pay in this case. So my break even at expiration would be 61. Okay, so if the price of expiration is above 61, I'm in profit. If the price of the expiration is below 51, I'm gonna have a loss. Okay, I'm gonna occur in a loss. Of course, we have a particular rules for exiting the position. We never go to expiration. Okay, so just put this trade on the market. So I'm doing a little bit of negotiation. Okay.
Order filled.
And here we are. The call is on the market. Okay. So this is our call. This is the manage. So it's the console that we use to check our position. Once the position is on the market, this is how we check how much are we gaining, how much our loss, and which is the expiration, how many days we have left to the expiration. And so it's our everyday tools to check our position. So in this case, we just put on market to November 6 expiration call with a strike price of 60, 39 days. The expiration is November 6, 2020. At the moment, because we had the slippage between the bid and ask, we are minus $5, and it's telling me the underlying price, which is 59.73. Then it's telling me the reward risk. The reward risk in this case is infinite, because there is no limit on how much the price of the horizon can go, but obviously that theoretical. And the other thing that I'm interested in, the max loss. Okay, the max loss is my risk. Okay, so in this case, my risk is $240. Okay, and then this is the percentage that I'm looking to see how much I'm losing, how much I'm earning. Okay, so basically this is how it works. As you can see, there is not a lot of particular thing to do, or you don't have to be stuck in front of the computer every day or every hour. A good way of operating with this system is starting on Monday. So Monday, you just go through the scan, check if there are any stocks that match the criteria, and then you go check all your rules, and then once you find the rules, you put it on the candidates list, and then after that you go on the option pro, on the option chain, and then you apply the two simple rules that I just said. So expiration between 35 and 45 days, and then a delta of the closest delta, I say, because it's quite difficult to find. Sometimes we can see a delta of 0.45, but usually we have to choose the closest delta to 0.45. Okay, so as you can see, there is nothing particularly difficult in this strategy. What you just need is to learn how the option works, which is quite easy, and then what you need is to check, once you put in on the market the trade, you have to check how is working, how is doing. How do we exit the position? Entering the position is always something easy and not so complicated. The thing is when we exit the position, because sometimes we can we have profit, but we say I can have more profit, so we wait to close the position, or or oh yeah, I get profit, so I just want to close the position immediately because I just got profit. Or I'm in a loss, so in a loss I'm gonna wait because I'm just losing 30%, and I'm sure that the market will rebound. I'm going to recover from the loss, and that's not how it's working. Okay, that's not how it's working. That's you can't rely on this thinking, this thought. What you need is a very specific exit rule, okay, that tells you exactly when to exit. In this case, we have a specific rule, which is the stochastic. Okay, so when we enter the position, like in this case, the stochastic is a perfect for a long position. As you can see, the blue line is crossing the red line, on the top, and is going higher. And what we have to do is just check these two lines. If these two lines remain, both in the same direction, so in this case they are going up, we're gonna keep our position no matter what is the profit. Okay, we just need to keep our profit and stay still. We don't have to do nothing. As soon as the blue line are crossing in the opposite direction of the red line, so in this case it's going to probably go turning downtrend, that's our exit signal. Okay, this signal can be used either in profit and either in loss. So if we enter the position and after 1 or 2 days the stochastic is crossing, if you are in loss, we just close the position. Okay. If we are in profit and the stochastic is keeping going high, we just leave the position, and then suddenly it's gonna cross the red line, then we're gonna close the position. Okay, that's quite easy and simple. We just have to respect this simple rule. Even if we think that the stock, might, go higher the day after, we have to detach from our personal thought, because statistically, when we have a cross on the stochastic, it is better to close either in loss and in profit. Okay, so this is the exit rules, which is pretty simple. Okay, so far, I guess we've been seeing all the working space. We see the chart, how to set up a chart, which tools are we using, which kind of scan we are doing, and which is our work in this case. We, as I said, we're going to do this for 3 days a week. So Monday, Tuesday, and Wednesday. Why we're not going to do it on Thursday and Friday? Because the weekend is approaching, and then since we buy options, when we buy an option, the option suffer from the time decay, suffers, from the passage of time. So we usually don't buy option close to the weekend, because the weekend the market is closed, and when we buy an option, if we hold an option, we are gonna lose time anyway, even if the market is closed on that option. So that's the reason we don't go and find trades on Thursday and Friday. So once we find our trade, then we switch on our options. We go on the option chain, we choose the options, and then we are at the market. Okay. The managing of the position, as I said, is quite simple. We just have to look at the chart and check if the stochastic is going in the same direction, the two lines are going in the same direction, or the blue one is crossing the other one. In that case, we're gonna close the position, either in loss and in profit. Okay. Well, I've been talking for more than 40 minutes right now. I didn't realize that. So now I'm gonna show you which kind of results we got using this strategy. This is one of the first time that I actually show in a webinar, in a free webinar, all the details of this strategy, because with Chris, we have this project of introducing equity, option, a different asset of trading, even spread trading on futures, because when you're a trader, you have different assets that you can use. The forex, it's absolutely one of the best, but he has also a risk embedded, which is not easy to control. Option and equity are a different style of trading, and they have different style of risk also. And spread trading and futures are also have also different kind of risk. So basically, we need to have a diversification of our trading, because there are periods where the forex is the best choice, and there are periods where the forex is not the best choice. There are periods where we have options, which is going good. The stocks, they are going good, and maybe the future they are not going good. So what we need to do is to learn several tools that would help us to, have a proper portfolio, which is not made only on one asset, but has several assets that will make you day by day, month by month, to have a constant profit, which is our ultimate goals. Have profit from the market every month. That's what we are working for. Okay, so let's see the profit. Let's see how we did so far. I'm doing this with one of my option trader, which is also a very good friend of mine. He's been one of my first students years ago, and now he's one of my colleagues. He's working with me on this strategy. He's also the owner of another strategy that is trading on a personal fund that we share together. And it's pretty good, and I really like Roberto. His name is Roberto Rossi, and he's the guy that writes all and elaborates and takes with me all the signals, and also take care of the chat, the Telegram chat for the signals. So let's see how we did in 2020. Okay. In 2020, we had so far a total of 37 signals. Okay, so with the rules that I just explained, we basically had 37 equities that had all the criteria that matched. On this, we had 23 that end up gaining and 14 that end up losing. So as you see, the probability of gaining is, on our side. The average gain that we had on the position was 62%. What does it mean, the average gain on the position? It means that if we have a position of 250, which is the risk that I showed you before, the 5% on a 5K account, we made more than $125 on that position, okay, in profit, $140 in profit on that position for average, okay? So we risk 250 to make 145. Usually, we also have profit that are over 100%. Okay, and we go through in the details now, month for month. So the average gain was 62%, and the average day to market. What does it mean? It means that how many days have we been on the market with the position. So we started the position, and then we've been managing the position. And the average days that we stay at the market is 8 days. So as you can see, it's it's not a long time. We don't stay on the market for a long time. Well, there are some trade that they requires more time. Like 12, 15, like even 20 days, but the majority, it requires less than 10 days, okay? So we started the service in February, like in the middle of February, and so we count in March as the month, for the first signal service. And we had in March, we had, including the 2 in February when we started, we had 10 signals. So as you can see, we don't have a lot of signals every day. So it's quite easy to manage the signals. And we have an average profit that month of 12%, okay? Now, 12% is a it's not very interesting. It's interesting. It depends. It depends on some factors. One is how much time do I use for this kind of trade. Of course, as you can see, I don't I'm not putting hours in this thing, and 12% in a month, I think that it's interesting because a lot of instruments, let's say safest instruments, do that in a year. Okay, so 12%, I think it's a reasonable performance for that month. And on April, we had 1, 2, 3, 4, 5. We had 5 signals, so we had half of the signal that we had in March, and the average profit loss that we had at the end of April was 16%. So it was close to the performance we had the month before. Then we had May. Okay, in May we had 1, 2, 3, 4, 5, 6. It's 5, 6. The average of the position that we have usually is one a week. Usually, okay. And this month we performed 30%. 30% is quite interesting. Okay, for a month. Then in June was an interesting month because we had like 6, 1, 2, 3, 4, 5, 6 signals, and the profit loss that we had was 0. This can happen. I mean, I don't trust system that they win all the time. They don't have a loss. That's not realistic. Okay. So in this case, we didn't have a loss, which would be perfectly acceptable, but we ended the month with 0. So for me, it's fine. It's a good statistics in our performance. Then in July, we have another 1, 2, 3, 4, 5, 6 trades. And the profit loss was 18%. Okay, so pretty good. And then we have August. August so far is one of the best months, even if there is a saying in Wall Street, they say sell in May and go away, because usually August is one of the worst months in the year. But in our case, August with 1, 2, 3, 4, 5 trades that we did in that month, we got a profit of 43%. Okay, which is a very, very good performance for that month. Now, 43% was an exceptional performance, and is not a performance that we can have every month, as you can see. But let's say that an average of 20% a month is reasonable with this strategy. So the service so far had only 1 month where we had 0. We didn't have any profit. Okay, so this means that the rules that we are following, choosing our stocks, works in. Of course, we are talking about probability. So this percentage that we have now, they are telling us that the statistics are on our side. We have like a 70-80% of probability of the of profit from our trade. The good thing about the system that we are using is not about the profit, because we are not focused on the profit. We are focused on the loss. Yes, we are very good to manage losses. That's why we have profit almost every month, because we manage profit. And one good strategy for managing the loss, one good strategy that we use for managing the loss is the stochastic that I just explained you. So when we have the cross of the stochastics, we just close the position no matter what is the profit, no matter what is the loss. Okay, so this eliminates any personal judgment in the position. Okay, guys, so I've been speaking for almost an hour so far, and I'm kind of getting thirsty also. So what I would like to take away from this webinar is that we have a great tools that are the options, and we have a great platform which might be a little bit intimidating at the beginning, but I assure you that it's quite easy, and after a couple of tutorials you'll be able to navigate the platform without having any problem. So don't worry about that. And with these tools, it's the result that you can expect are the same that we had so far. So what you can expect is the same result that we have done in the last month. So what I would like you to say is I would like you to learn this strategy. I would like you to apply this strategy because I really would like you to have a different tools that you can use, with the forex. Because as I said, having different weapons, in our arsenal is important for being profitable every month. So thank you guys for following me till here. I've seen that you've been, all connected. This is really, really nice. And Elite CurrenSea has, everything you need to start learning this strategy and this platform, and as also the swing service available for the people that are starting the course in option. And also Roberto and I are here to help you for any doubt, any question, any problem that you might have. And so thank you guys for being here tonight. And I really appreciate you having here. And, I'm gonna ask some question at the moment if there are. Okay, Marius saying the smallest amount is $5,000, $5,000, because it's a matter of money management. Okay, so when I said that I'm going to use 5% of the account, it means that if I have $5,000, I'm going to use $250 on that account. So that's the money management. We are not going to use all the 5,000. Okay, we're going to have like 3, maximum 4 trades in a time. So we're gonna have like $1,000 in trading. The other 4,000 will be cash, but we need that cash for just for having our buffer to margin, to volatility increase and everything. So just to be safe, I suggest a 5K account to start with. Okay. Well, guys, thank you again for following me. Have a great night, and I'll see you again to the next webinar. Thank you all. Thank you all. Bye.